Good morning, Paul Georgie from Allendale. It's March 9th, 2012, Friday morning, and the USDA released the monthly supply-demand numbers, and the surprise in the report is that they're kept all the numbers the same, basically. Corn ending stocks in the U.S. did not drop it at all, kept it at 801. Looking down the balance sheet, didn't change anything, and what they did change, however, is the price range. They narrowed the price range in by 10 cents on the bottom side, and they lowered the top side by 10 cents as well, keeping us in a trading range in the corn. In the soybeans, trade was looking for ending stocks to drop to 260. Many thought it could be much greater than that. The USDA left it unchanged at 275 for the soybean ending stocks for this marketing year, and however, they did raise the average price by about 30 cents, which gives us now an average price for soybeans around $12 for the old crop. In wheat, we did get a little bit of reduction there. They lowered the ending stocks to 825. Usage certainly up there, probably feed usage would be our estimate, and the trade was looking for 836, 825 was the number on wheat. The other areas of attention that we talked about this morning: what do they do with production out of South America? Argentina corn production 22.0. They were looking for the last month was 22 million metric tons. Trade was looking for near 21 million metric tons, so kept that unchanged. In Argentina soybeans, trade was looking for 46.8. The USDA came in at 46.5 million metric tons. That's a reduction from 48 million metric tons last month. The Brazilian corn, they raised Brazilian corn production by 1 million metric tons from 61 up to 62. The trade was looking for 60. So a surprise there. On Brazilian soybeans that we've been talking about, and trade's been talking about here for some time, they lowered that from 72 last month down to 68.5 million tons this month. The trade estimate there was around 69, but even though the trade estimate was there, it felt like they were trading a much deeper reduction, down as much as to 67 million tons, it felt like the trade was trading here going into this report. So all in all, a neutral report for numbers, bearish I think for the market, soybeans especially. We rallied sharply here before this report. Would expect to see some selling here on the opening. The big question that we're going to have today, I think, is the USDA not making any changes on demand and exports of corn and soybeans, especially soybeans. The trade's going to look at that and say, well, that is got to come at a later time. So even if we get a sharp sell-off here in the soybeans on the opening, don't be surprised to see the bulls looking at this thing as a possible buying opportunity. Where we end up today is going to be a good question with the sharp rally that we've seen, and we would expect markets to open possibly sharply lower in the soybeans, corn 5 to 10 lower. You'd have to call soybeans right now anywhere from 10 to 20 lower, and as we get time to work through the numbers and get closer to the opening here at 9:30, there's could be a change in that, but expect some very volatile openings here this morning. Other news: we did have unemployment number come out at 7:30. That was a number that everybody was waiting for as well. Unemployment at 8.3 million people. It increased jobs by 272,000, so nothing real exciting there. It was kind of within range. Since that time, the dollar has rallied. We're up about 50 points in the U.S. dollar index. Bonds have set back. Stock market has come up a little bit. So And also, we did have the Greece announcement on their debt swaps. They had about 90%. They needed 95. They used a program called the Collective Action Clause that they had available that forced people to come in and accept the recommendations. That had caused the euro to sink here overnight, and is also causing some strength to the dollar. So all in all, when you put it together, the outside markets plus the USDA report, we have to think that the markets are going to be lower here this morning. We're going to be testing some key technical support areas in the corn market, and because of the extreme overbought condition that we've got in soybeans, expect to see some pressure there, at least early in the session, as we digest and get over the shock of no change in the U.S. soybean ending stocks. In the livestock trade, they're going to follow the stock market here somewhat. Feeder cattle might react and be a little positive from lower grain prices, but the cutout values in beef were down yesterday. And we see some weaker prices here this morning at the CME. We think the cash trade is pretty well done for the week at this 126, 127 level. And we would, with the weakness that we've seen so far this week in the cattle market, expect some support to come in here just below the yesterday's lows. So look for some wild markets here this morning. Reasons to stay in touch with Allendale's research. Give us a call if you got any questions at all. We'll try to answer them as we work through these numbers a little more and digest them. We'll also be sending out some updates here for our subscribers, so make sure you get signed up for that. If you got any questions, 800-262-7538. We hope you have a very successful trading day, and we'll talk to you on Monday morning. Thank you.